Hello everyone, I'm Harold Kaplan, and I'm co-chair, honored to be the co-chair with Josh Sussberg of Kirkland and Ellis for this 29th annual Beard Group Distressed Investing Conference. This conference is the first and therefore the longest running distressed investing conference in the country. It's really an honor to see you all here today. This conference has been a labor of love for many of us in the restructuring and investing community over the years. And we have to thank the Beard Group, Peter Chapman, Trouble Company, prospector, and reporter, Turnaround and Workouts for continuing this tradition. This year, we're back to an intimate, in-person event of leaders and up-and-comers in the industry, both on the panels and in the audience, who enjoy getting together, schmoozing with each other, and honoring each other for their achievements over the years. Having said that, this year's conference continues at its traditional high-star quality level and promises to be better than ever. We have a full day of all-star panels, moderated and filled with mainstays, long-term friends, and the creme de la creme of the restructuring industry. We have cutting-edge panels, which in retrospect, since we chose many of them a couple months ago, seem to be really hit the target. Josh is going to head one on the economy restructuring prospects. We have panels on distressed healthcare, the so-called lender-on-lender violence, transactions, litigation, alternatives to bankruptcy, mass torts, and crypto. So it's a pretty full and I think spot-on day. We're also going to honor in the evening the outstanding young restructuring lawyers, and over lunch in what may be one of the more bittersweet and emotional events for many of us. We're going to honor our revered long-time friend and restructuring industry leader and legend, Bill Brandt of GSI, who's going to receive the Harvey Miller Award. A lot of the credit and luster for the conference really goes to my co-chair, Josh Sussberg, who Kirkland and Ellis, who's not only one of the premier, and some would argue the premier bankruptcy lawyer in the country right now, and attracts an audience, as we can see today. He's again had and is having a banner year at the center of the restructuring world. And he's already filed in the last couple of months such cases as Voyager and Celsius Network in the crypto area. He's filed Cineworld, Altera Infrastructure, with more seeming to be on the horizon, maybe even some we talk about today. As is the case every year, the overriding goal of the conference is to ask where we have been, and more important, where we are going in the distressed investing and restructuring industry. Last year, after a previous heavy year of particularly oil and gas and retail bankruptcies, we seemed to come to a consensus that restructuring was and was probably going to be, at least last year, less busy than it had been, with the blame laying at too much government money going into the system, and it's not really being sure where things were heading. I particularly recall at our initial session being only able to extract from Josh a concession that maybe the dress pants industry might be in a downturn, because we had a concession that to the extent that people were not wearing dress or any pants often at the court Zoom hearings that were on there. Things may change this year. However, I get the impression from Josh, who I think sees more at an earlier stage than anyone else I know, that this year promises more restructurings and even bankruptcy activity. So while we're going to hear a spectacular panel from Josh at 8:50, I just want to turn over to Josh to basically talk about what he thinks about the conference, where the restructuring industry is heading, and anything you want to tell the audience.
Well, thank you, Harold. I very much appreciate the kind words, and thank you for all your work on this conference every single season. It's tremendous, and I think it's gained a lot of momentum. I guess what I would say is, I think a lot of us are sick about talking about the pandemic, and the reality was all we could do was talk about the pandemic because we were busy for 6 months, and then things fell off a cliff. And that was much the case for 21 and 22, until over the course of the summer, we started hearing fears of recession, the inflationary pressures, and all of a sudden, activity picked up. And I think it's an incredibly exciting time to be a restructuring professional. I think it's an incredibly exciting time to be a restructuring investor. There are a lot of opportunities. There is a lot of dislocation. And I think ultimately what we're going to see is a complete repricing after the government poured liquidity into the system to deal with the battering of the pandemic, and now you're seeing a correction. And whether we're in a recession or we're going to be in a recession, the inflationary pressures are real. The interest rate rises have really, really hurt and impaired the real estate class. And there's a lot of people, I was talking to someone yesterday, they said they could sell their current apartment for more than they would ask. But where are they going to move? Because interest rates are at 7%. And I think that fear is starting to have a contagion effect. Not to mention, the crypto explosion and the most recent filing of FTX, which has ramifications well beyond just that company. And then Max Ford, and we're going to talk about that during the course of the panel that we had this morning with some unbelievable people that are joining us. There's a whole new world in which not just the Texas two-step, but subsidiary obligations being dealt with in a bankruptcy, 3M and Arrow, one example. And these could be roadmaps for many companies, many blue chip companies that are dealing with long-term liabilities that are harnesses around their neck. And so I think all those different areas, as well as liability management, we've seen a huge uptick from. When I started my career, I was a bankruptcy lawyer. Then we became restructuring lawyers. Now we're liability management lawyers. It just sounds better. Clients like that better. But it's real. There is a lot of companies that are taking a look at their balance sheets and figuring out, are there ways for us to extend runway, capture discount, gain liquidity? And the real question is going to be, and we'll talk about this on the panel at 8:50, are we going to see more traditional restructurings, or is it going to be a lot of liability management transactions? And the question with the liability management transactions are, to what end? What are you solving for? And are you actually building a bridge to a brighter future for the company? Or are we simply putting in place a more complicated and Frankenstein-esque capital structure that's even more difficult to deal with if the company does not succeed? And I think all those things are extremely relevant, and all the reason why I think everybody in this room that lives, breathes, and touches restructuring should be super excited about 2023 and frankly well beyond, because I don't think the economy, whether or not there's a recession, is going to find itself in a booming marketplace and environment anytime soon. And I'm sure Steve will speak to this when he talks. But again, I just think it's tremendous opportunity for a lot of people to invest, to restructure, and try to maximize value of various companies that are admittedly on their heels after getting liquidity and now having no runway, covenant issues, and major concerns. So look forward to a great day. We really appreciate all the support for the conference, and look forward to having a conversation this morning and then letting everybody enjoy a bunch of really all-star panels that we've lined up. So thank you.
Thank you, Josh. Like I said, every year, just remind you of the best. Anyway, we're going to start. We're already late. Another tradition of the conference. But we're going to move on to our first panel, which is traditionally Steve Gittimo, who's the president and managing partner of Vertus Capital, a Florida and New York-based hedge fund specializing in investing in restructuring and distressed securities. And he's been investing capital since 1994, and we always look forward to his stimulating comments at this conference. So Josh, it's time for us to go to stage.
Yep.